signed up and is currently in the class. This is something I've been wanting to do for a while. As you probably remember from 16 months ago, I'd waited almost 10 years to present any kind of wave count on Bitcoin because it was extremely difficult to make any sense of it. And I started to think that Bitcoin just didn't follow wave theory at all. But about 2 years ago, it started to look like maybe it does, and that it was forming some very unusual wave patterns, things that are not part of orthodox LA wave, patterns that I call diametrics and symmetricals. So that's when it started to become a little more apparent that it was starting to adhere to at least neo-wave theory guidelines, and that I might be able to produce a wave count that made sense. So the most current today's webinar is because the structure is getting increasingly clearer and some major events could happen in the very near future from the current level. So I wanted to make sure we covered that and reviewed what I was saying 16 months ago, discuss the structures we were talking about then, and then update where things stand now and where things are likely to be headed. Let's look back 16 months ago. Okay, so these were two of the scenarios. I'll zoom in on these in a minute, but these were the two scenarios. The left one was the less bullish count, where I was looking for the market to for Bitcoin to buy where it was at the time, and then start another big rally up to maybe 30,000 or so. And the more bullish scenario allowed it to go up to about 130, 120, well over 100,000. And turned out that this one is more accurate than the less bullish scenario, even though they were both bullish at the time. So let's take a little more detailed look on this. This was exactly the chart that I used in the update, and I was indicating that we probably had bottomed, but in a typical pattern, all standard LA wave patterns, the B wave is going to take the same time or more as wave A. And you can't anticipate when a B wave is going to take less time, because even in symmetricals and diametrics, it's very likely to take the same time or more. So it's far less common, probably in the 20% range maybe, that a B wave will take less time than an A wave. So there's no way I could have anticipated that. I had to just base it on normal probabilities, about 80% likely that the B wave will take at least the same amount of time as wave A. And then after that, the C wave would rally similar amount to this based on how far it rallied previously, and based on a 61% retracement, that we would probably rally a similar amount. So this is what actually happened. You can see the forecast of the B wave bottoming, but taking more time, and then the big rally for wave C going up to close to 30,000. But in this case, the B wave finished soon after that update and started the rally, of course, much sooner, because the B wave was already over. And so I immediately knew, once we exceeded this high, that something other than a typical flat or zigzag was going on. And under a neo wave, beyond flats and zigzags, you can have unusual triangles, which would be triangles with reverse alternation. You can potentially have neutral triangles. You can have diametrics or symmetricals. So I started going through the checklist as this was happening. And my first assumption in this area was that we were probably in a triangle, because wave B took less time than wave A. And when you're going up the decision ladder, you always assume that the first pattern you're going to get is a zigzag. And if it doesn't follow the rules of a zigzag, then you move on to a flat. If it doesn't follow the rules of a flat, you move on to a triangle. If it doesn't follow those rules, you move on to a diametric. If it doesn't follow those rules, you go to symmetrical. And then if it doesn't follow that, then you move on to potentially an impulsive pattern. So that's generally the sequencing of events and how you make decisions. So I knew when the B wave took less time than wave A triangle was the next choice. But in a triangle, you don't want the C wave to be virtually identical in price to the A wave. And in this case, it takes less time. Those are two highly improbable outcomes for the C wave of a triangle. So when the C wave off, I knew, well, the triangle's probably out, and we're going to have to consider diametrics or symmetricals. When you're in a diametric, you're looking for time similarity. a lot of time similarity. So 5 of the 7 legs you're looking to be similar in time. You can see here wave A is the biggest, wave B is much smaller, and wave C is about halfway in between, but it's nowhere near the time of A or B. So we have no similarities here at all. For this to have eventually developed into a diametric, we would have had to have the next 4 waves in a row all identical in time. And you can see here, based on how long it was dropping, that that wasn't going to happen because it was already much bigger than this, much bigger than that, and slightly smaller than this. So we were running into a situation where time similarity just seemed an improbability. So I wiped out that as a scenario. So a symmetrical was the only real choice left. And a symmetrical is a 9-legged pattern where you're going to have a lot of price similarity, not time similarity, but price similarity of the advances, and then separately price similarity of the declines. So in this case, you can already see this advance and this advance are virtually identical. This drop and this drop are getting very close to being equal in price, not time, but in price. So we already had 2 indications that we might be in a symmetrical. Now symmetrical is 9 legs, so that meant after the D wave finished over here, we'd have to get an E, F, G, H, and an I wave. And that's what this count was about. There was the bullish of the 2 scenarios. So I had this less bullish and this more bullish scenario. So I'm going to go over the more bullish scenario here. So this was predicting that we could have had a G and an H, or an A and a B and a C, but the most likely we were going to get an I wave rally, and that was going to allow the market to make all-time new highs. And as you probably know, Bitcoin did exceed this all-time new high by a little bit. So here was the forecast 16 months ago, and I tried to merge them visually so you can see how close they panned out. So here was the forecast, and here was what actually happened. It was a little bit, it topped a little bit lower. It may not be finished, but it topped a little bit lower, and we're starting to get a lot of hesitation in this area. We did make an all-time new high, but we're hesitating a lot, which makes me a little nervous because it looks more like a correction of the rally instead of a conclusion of the rally. But we'll talk about that after a while. So these were the 2 primary scenarios: the less bullish forecast based on the market in a bear market, and then the more bullish forecast that it's in a bigger bull market. So this count here with the I wave rally was based on this scenario here. We have the G, the H, and the I, and that we could start a really big rally for wave I. But this was projecting to move minimum well over 100,000, maybe up to about $1 million for Bitcoin, assuming that the H wave and the I wave would be similar to the prior C wave over here and some of these other advances. But this was not my favorite choice. The other possibility we discussed, we had 3 bullish scenarios, was that we were already in the E wave of a contracting triangle. For this count to work, we had to assume that wave C started here, so that it would, on an intra-month basis, not on a half-yearly chart, but on an intra-monthly basis, it would have had to start here so that wave C was 61% of wave A, and then wave B would have to be shorter than wave C, which means it would be limited to barely exceeding the previous high. We probably have gone a little too high for this scenario to work. Let me make a quick measurement of this on my chart just to make sure I'm correct about this. As long as it doesn't go above 100,000, this scenario could still be correct. And then the preferred scenario was this one. I'll explain to you why shortly. That we were in an expanding triangle beginning over here, and that in that pattern we were in the C wave. So if this scenario were correct, we were already in this next bullish phase, which could go up to maybe 800,000 or something, and then come way back down to maybe 50,000, and then go way back up into the millions. So this was the favorite scenario, and I'll explain that to you in a minute. These were the bullish scenarios. So we had the 3 bullish outlooks, which were these, and then we had 3 bearish scenarios, and one was based on the G wave finishing at the high before the all-time high, and this would be an elongated, this would be an ABC as part of a triangle with the D wave overlapping the B wave here, And I was assuming it might be an expanding triangle where we get a nice sell-off for wave E, and then go into a correction maybe for an X wave, and then take more time and potentially go down to this level. These are all the predicted, the price time prediction lines based on the X wave taking a third of the time of the previous pattern, taking half the time of the previous pattern, and taking 100% of the time of the previous pattern. And you can see based on how the market was declining, these were probably out because they required the market to drop too fast, but it was still possible. This one was in effect at the time, and this one looked the best, which would suggest the market may not drop much below the F wave low and could take almost 100% of the time of the previous pattern. The next choice was that we had an elongated flat starting from the prior high, followed by an X wave. And this again would have projected, lows around here or here, and maybe over here if the market took a lot of time forming the next few patterns. So we could get an X wave, another ABC, maybe another X wave. It could finish anywhere along one of these time frames. There was no way to know exactly, but we knew it couldn't take longer than this, and it probably wouldn't go lower than this. So those were the one of the three bearish outlooks. The primary choice was this one, and I'll explain to you again shortly, was that we had the G wave finishing at the all-time high. We had this violent drop, which was the biggest, fastest drop going all the way back to over here. And we were correcting that decline with sort of a sideways, irregular, flat pattern. There's no way with only 4 waves to look at that I could have made any concrete kind of conclusions. With NeoWave, you always need at least 13 mono waves to make good assessments of what's possible into the future, and you don't want more than 55. So you always want the visible structure that you're working on with a new pattern to run between 13 and 55 mono waves. If it's less than 13 or more than 55, it's going to be hard to be sure. If it's more than 55, it allows a lot of flexibility, and your opinions and emotions can start to play a part in the analysis. If it's less than 13, then there's just not enough information to make good decisions. Ideally, you want it between about 21 and 34, but at least 13 and no more than 55. So with only 4, there's no way I could have been sure of this analysis, but that's visually what it looked like. As it turned out, the A wave actually ended at this low, which changed the whole picture, all the structural possibilities, everything changed with the A wave finishing at the low here instead of the higher low. So we go back to this scenario here, this one here, where we talked about the B wave taking less time and the C wave being similar to wave A and the D wave decline being similar to wave B. That suggested a diametric, which then would allow for much more upside. And if I had known that at the time I was drawing this chart, I would have moved the A wave to this low, because I would have realized the B wave had a long way to go, and the only way it could take a really long time is if it kept rallying and going back toward the highs. So if you look at this structure and you assume wave A finished here, that means that this becomes not just a single mono wave drop, but a zigzag decline. And the C wave of that zigzag would only be 38% of the A wave. Whenever a C wave is a lot shorter than A wave, that implies strength, and that strength would then indicate that the B wave would retrace most or all of wave A, and that's what ended up happening. So markings concept, which I introduced 16 months ago in this webinar, which is a derivative of the rule of reverse logic, which states that anytime you have a lot of scenarios, you want to always pick the count closest to the middle. And generally that middle is preferably a middle that happened in the very recent past. The other choice, secondary choice, is the very recent future, or the very near future. And the further back in time, or the further into the future that middle point occurs, the less likely that the count's going to be correct. Now, how do you decide where these middle markings go? If you're in a flat, the middle of a flat is wave B. So if you are assuming and you're labeling the pattern to be in a B wave, you want to put the middle marking in the middle of wave B. If you're assuming you're in a zigzag, the same thing. If you're in a triangle, the C wave is the middle, so you put the dot in the middle of wave C. If you're in a diametric, you put it in the middle of wave D. If If you're in a symmetrical, you put it in the middle of wave E. So you always know where the middle is going to be based on the pattern you're assuming is unfolding. So using that concept, the two counts that came out as the best choices for Bitcoin was this bullish scenario where the middle was just right into the near future, and we were already in the C wave. Even though I didn't like this structure over here, this part looked pretty good and made a lot of sense. And the primary choice was that we were in a bear market, and the middle was slightly into the future also, and it was going to be part of a C wave decline in a zigzag, and then followed by an X wave and another ABC to make this bigger X wave. And this X wave would have been a third of the price and a third of the time of this whole pattern. I assume that would be about the minimum target. But as it turns out, wave A finished at this low, which then allowed the B wave to go back to the old highs. So that's a review of what I was saying 16 months ago. And what we're going to do is we're going to review all those scenarios, list all the possibilities as they occur now in real time, reapply the rule of reverse logic, and then use the best counts on each larger time frame, transfer those down to the smaller time frames to get to what is likely unfolding in current time. So this is the first change that needs to take place, is that I moved wave A on the chart from this low to this low. And the minute that happened, this small C wave compared to the bigger A wave, ABC, implied strength, which then allowed the B wave to go all the way back to the high. Now, some very important parts of NEO wave, which aren't part of orthodox Elliott wave, it's important to understand that violent price action always happens in the direction of the trend. So the biggest moves on a chart are always in the direction of a trend. These slower movements are counter trend, especially if they take more time, more time and more complexity. So here you can see this drop right here, which I'll show you on the next chart, but this drop right here is the biggest, fastest decline to occur all the way back more than 10 years ago. Sorry, about 10 years ago. So that meant that this was very likely the beginning of a new pattern. And for that reason, I've stuck to this scenario for a very long time. And you can see the recovery here is much slower and much more complicated, proving that this is almost certainly the beginning of a new pattern. Now, the weird part, though, is how small it is, because we have this very large advance that's only been retraced, what, maybe 5%, 10%, a very small amount, and then it's been completely retraced. That's very unusual, and that kind of behavior is something usually only reserved for expanding triangles, where you get violent price action for wave A compared to wave B, but you don't retrace very much because the retracement is being delayed and will occur later into the future. So if this is wave A of an expanding triangle, the B wave has done what it needs to do. It's made the new high. It's taken more time, more complexity, but the C wave would need to be bigger than wave A, at least by a little bit. And then we would get a D wave that needs to alternate. So this would produce what I call reverse alternation between wave B and D. So D will be smaller, much smaller than wave C, maybe 61 or 38%. Wave B is basically 100% of wave A. And then the E wave could be the longest wave, and we would finally then break below this F wave low, which is around 5,000 or something like that. So that is very, very bearish for Bitcoin. Now, the latest price action is starting to indicate we might actually go higher before we begin the sell-off, and that's going to change what can happen into the future. Now, what could be going on here is that I'm not very familiar with the rules that guide retracement of diametrics and symmetricals. So for that reason, I can't be sure how much retracement is required of this advance. So to get into a little more detail on this, I'm going to go to the real-time charts, and we're going to go through that and get into a lot more detail. So I'm going to start a top-down analysis process, which is what you should always do when you're doing wave analysis. Never begin from the bottom and work your way up, which is mentioned in my book, and that's the only real major mistake in my book. You always want to start from the top and work your way down, and you want to use the rule of reverse logic and the middle markings to mark the middle of all the patterns that you currently think are unfolding based on whether it's flat or zigzag or whatever. And then figure out which one of those counts is the most likely to be correct based on which one is closest to the middle of its development. So let's take a look at the 6 monthly real-time Bitcoin chart. So here's the count I just showed you a minute ago, but I wanted to point out this situation right here. I'm going to zoom in a little bit. So this is the biggest, fastest drop in about 10 years. Here's a comparison of the previous decline. You can see it's slower and smaller. This one's a little bit smaller. Hold on a second, let me zoom back over here. This one's a little bit smaller. Only this one is bigger, and that was 10 years ago. So this suggests this is probably the beginning of a new pattern that starts here, that's separate from all of this, and we're in that pattern now. And this slow upward movement that takes a lot more time and is choppier is counter trend behavior. So this indicates the new trend is down. This is counter trend. So the future drop should occur sometime soon. What I can't be sure of right now is whether wave B is over and whether it occurred at this high or this high. We can't decide because we don't have 13 mono waves since the high. So it's an indecipherable possibility on this particular time frame. When we zoom into monthlies, we can see a lot more and make that decision a little bit better. So the possibility that we're in this expanding triangle still exists. The middle of that structure would be over here in the future. But I can't be sure the B wave is over, and I see no proof that it's finished, because to prove it, we need to have a really nice drop that's bigger and faster than all these corrections inside of wave B. We don't have that yet. So it's possible, and this is a new development for my outlook for Bitcoin. It's possible that the B wave is not finished yet. And if it's not finished, excuse me, it could be forming another upside move. So we could be in some kind of double zigzag where we have a zigzag already. The X wave would be the middle of this complex pattern. The B wave is the middle of the whole structure for the X wave. And we could be in another rally up above 100, 130, maybe even 160,000 on the chart, which is going to only be determinable when we go down to monthly and lower time frames. We can't figure this out here because we don't have enough detail. But I just wanted you to realize that this is becoming a possibility because we're not getting the violent drop yet, and we're hanging around the highs. And when I zoom in on the next lower time frame, you can see it's really not dropping very quickly. So let me move on to the monthly charts. So the first assumption is that the B wave is over, and we've started the bear market for wave C. But as you can see, it's not dropping very quickly. The alternate choice is the B wave is not finished yet, and we're in an X wave, and we're going to get another probably ABC, probably a flatter triangle, very unlikely to be a zigzag, but it could be a flatter triangle taking another year or two. So that's how this connects to the larger time frame. Here where we have A down, B up. On this monthly chart, here is the A down and the B up, but we don't know for sure if the B wave is over. So it is or it isn't. And we're going to zoom in a little bit on that possibility. So if it's over, this is the reason I initially assumed there was over. This is the biggest, fastest drop in Bitcoin that's occurred since the end of wave A. You look at every drop, and all of them are smaller than this particular decline. I'm just going to drag it over so you can see how much bigger. It's a little bit bigger than this one, much bigger than that one, comfortably bigger than this one, or at least a little bit. So it is the biggest, fastest drop on the chart. And for that reason, I presumed that that was the beginning of the pattern. Then I saw how much it got retraced, and I thought, well, to get retraced that much, the only possibilities are we're in a symmetrical, a diametric, or a triangle. Because the time of wave B is less than the time of wave A, so that wiped out the flats and zigzags. The tracing was too much for zigzag. So these were the choices. The C wave turned out to be a little bit longer than wave A, so it could be an expanding triangle. The other choices still remained. And if the B wave wasn't finished, then this whole decline, whenever it's over, would be an X wave. And the current rally is violent enough to suggest maybe the X wave is over, but we can't see that on this monthly chart because there's not enough detail here. So we have to go down to weekly charts to see that. So this is a long-term weekly chart showing the entire, this is supposed to be wave A, sorry. The entire B wave rally and then the decline. You can see it's going very slow, and this is a pretty violent rally to occur at this stage. So it's making me nervous that something could have finished here, and that would, if it is, then that means the B wave is not over. So this is the bullish side of the equation. Normally, if y'all have been with me for a long time, you realize I virtually never have bullish and bearish counts. It's something, unfortunately, we can't avoid at this time in Bitcoin because of the uncertainties on the long-term structure and behavioral inconsistencies that are occurring now, such as this violent rally, are starting to make me think we didn't top and that we could go higher. So the bearish scenario is that it'll only maintain itself as long as we stay below 70,000. If we stay below 70,000, then we can keep inching our way down over a period of time and produce the necessary outcome from the monthly charts. I don't think I have that mapped out here. Yeah, I don't have it mapped out, but the outcome would be continuing decline and possibly dropping dramatically more than what's shown here, but it would have to keep going down and sideways for probably a year or more. It just can't exceed 70,000. The minute we exceed 70,000, then things start to imply, especially because of the violent nature of this rally, that this is just the first phase of wave B, which is a symmetrical. We would go through an X wave, which could take longer, but when the X wave is finished, any move above 70,000 will indicate that it's probably over, and we started another phase of this B wave. It'll be another correction that'll probably take about this amount of time. Normally in complex patterns, if the first pattern is beyond a triangle, like a diametric or symmetrical, then you take that time and you add the X wave and the other pattern together to equal this previous time. So I took the entire time of the symmetrical, added it to the beginning of the X wave, and that gives us a very good idea of how long this pattern might take. So then I took 61% because long-term structure would not favor the B wave would get excessively large. You don't want a B wave to be more than 161% of the A wave. So that limits us somewhere in this territory up here. So we want to keep the B wave at a reasonable amount, which in this case allows it to go about 100 to 160,000. So if we exceed 70,000, there's a pretty good chance we're going to be going up and sideways for the next couple of years, producing a significantly larger B wave than the A wave. And if that happens, then the bear market will not be nearly as big as it could have been. So that's going to start to alter the bearish outlook. Let me go to the long-term chart here. Let's see. Okay, so if the B wave is not finished yet and we get a rally up into this territory, then we have a situation where the B wave takes a lot more time and a lot more price than wave A. So that's going to put us into a situation where the C wave should be more similar to wave A. So on this 6 monthly chart, if wave B turns out to rally a lot more, maybe get up to 160,000, which is probably a little bit higher than what I show here. Let me take 161% of wave A real quick. And that's going to be about right there. So if the B wave is comfortably large, it doesn't have to be that large, but that would be about the most it could be. The B wave is that much bigger, more time consuming, more complicated, then the C wave is likely to be very similar in price to wave A. It's going to take more time, but price-wise, it would be almost identical to wave A. So if we take half of the time of A plus B and make it equal to wave A in price, that would project a move back down into, say, the 30, 40,000 range. So we could go up to about 160,000 on the maximum and be 130 on the minimum. and drop down to $25,000 to $50,000, something like that. And that would be the more bullish, longer, both shorter term and longer term for Bitcoin. So these are, what is that? So there's somebody doing some drilling outside. So this would be the more bullish outlook. And let me go back to the shorter term charts. So you have to prepare for the possibility a move above 70,000 that we're going to go a lot higher, and that it's going to take a lot more time, and it's going to probably go for about another year or two. And once we reach whatever the conclusion of this B wave is going to be, then we would get a big sell-off, but it would not go way down into the low territories that I've mentioned to you before. So the really bearish scenario will immediately be eliminated on any move above 70,000. So we're right at that point where it's getting extremely close. Let me go to the weekly chart. It's getting extremely close to where we're going to eliminate the super bearish scenarios and deal with more bullish for a while, and then maybe a big sell-off in a year or two, but then longer term, much more bullish. So let me go back to the really long-term 6 monthly chart and realize that once this is finished here, it could project on a massive advance longer term. It would have to be something maybe 61% or more of this entire advance. I apologize for the noise outside. I'm not sure what's going on. And we would add this amount, about 61% of this previous advance. And so we're pushing over, you know, what is it, 10 or 100 million, something to 10 million, it looks like. So it'd be a drastic, massive move over a long period of time. And this would be, of course, the adoption, in my opinion, of Bitcoin becoming the international worldwide standard currency, which I think will happen. I've said this before, but I'm not sure if I've said it in my class 16 months ago, that hold on. What is that? I really apologize for that noise. That I think that Bitcoin over time will do what the internet did for the music business and for the book business and for the movie business, that it's going to sort of decentralize financial control away from banks and governments, and it's going to become the de facto currency of the world. And people are going to love it because it can't be inflated, can't be manipulated, potentially can't even be taxed. So, and it's super portable. You know, it's not like moving physical gold around. So I do think it will become the international standard of currency. And if that happens, and as it happens, it's going to make Bitcoin incredibly expensive. So, because there's only 21 million possible Bitcoin that can exist, and a lot of those have been lost over time. So I'm not sure the current available amount, probably 18 million, 17 million, something like that. I'm just guessing. But eventually it's going to have to move up dramatically more. And this count would allow that to happen, whereas this count would require that we continue heading lower and dropping off dramatically below 50, maybe even 40,000 over the next 6 to 12 months. So these are the two scenarios, and they're very different from each other, of course. And that's why I thought it was important to do this webinar, because we're at a crucial juncture, and it's going to be you know, a significant difference between these two scenarios. Now let me zoom in on these two counts on a weekly basis, where either we're finished with the next wave, or it could still be forming, but eventually we'll break 70,000 and move a lot higher, or that the B wave is already over and we're in the bear market and it's just going to keep going lower for a while. So zooming in on that, if the B wave is still forming, we could have an expanding triangle, and that recently ended, and we're now in an X wave, and I can't say exactly how long the X wave will last. And then we'll get another ABC that'll drop, you know, further down, maybe into the 50,000 range. And then the other possibility that's it's not as likely, but it's possible, is that the B wave is still forming and the X wave is already over. And another possibility is that the B wave is finished and we're in a symmetrical pattern because we have two similar drops currently and two similar rallies in price. That suggests the possibility of a symmetrical, which means the market would just keep inching its way down over time. There's no way I can say which one is going to happen, but I am a little bit nervous about how violent this rally is, which is why we need to have this break-off point at 70,000. So review all the scenarios, and we apply the concept of middle markings and the rule of reverse logic. We can start to hone in on which one is the most likely and what needs to happen to prove them. So if the B wave is going to be part of just a running flat and it's part of a much more bullish outcome, which to me makes sense fundamentally, even though I can't prove it technically with wave theory. The middle of that B wave would be right here. So we'd have a zigzag, an X wave, and then a zigzag that's still forming and unfinished. So the middle of the B wave, or the middle of this flat would be the B wave, and the middle of that B wave would be this little X wave within this double zigzag. So this is the middle of the middle of the middle of this super long structure. And anytime you have patterns in the middle of the middle of the middle, you're going to have lots of counts. And that's why we have so many different ways of looking at this. This is always a phenomenon that takes place when you're in the deep middle of many, many patterns. So it makes sense that this would be one of the best scenarios and outlooks. Now, if we assume that the B wave is already topped and we're heading lower, then the middle of that pattern is slightly into the future. So we have one that's in the past, which is generally the better choice, and one that's in the future, which is generally the less likely choice. They're both possible, but this one is more likely now because it's a middle that's already occurred instead of a middle that we're anticipating. So this has now become the preferred choice, which is much more bullish long-term. And as we take this scenario and bring it down to the next lower time frame, I'm going to go to the monthly. That makes this choice now the top priority. So I'm going to move it to first position. And if that's correct, then this count needs to be moved forward. I can't tell you when the X wave will finish on this time frame because there's just not enough complexity here. But we would have the symmetrical rally. We'd be in an X wave and get another ABC. As we zoom down to the weekly charts, that would make this count now the more likely choice, this one the less likely choice. And as we zoom in on this pattern here, we have an X wave where we're in the middle of a complex pattern. So we have a triangle, an X wave, and then another pattern, which would all be part of this bigger X wave right here. So it looks like from a weekly chart, the X wave is probably not over. So it could be a little bit into the future, or it could be here if we exceed 70,000. If it's not finished yet, then we're going to finish the X wave sometime soon and start another decline. If it is finished, 1,000 and start the new trend. Again, the better choice is that it's not finished and we're going lower. I mean, it's going to sort of wear away at people's, excitement about Bitcoin, but eventually it will start, heading higher, even if it does take more time. So this line would move from here to over here, but it would still produce a very similar outcome. The symmetrical idea is possible, but remember that's our lower likely choice now because of the 6 monthly charts favoring that we're no longer finishing wave B, but that we're still forming wave B. So I'd rather stick to the more probable scenarios. So if this is correct, I don't think the daily charts are going to be that useful, but I do have the daily chart open. Here you can see the expanding triangle listed and that we're in this X wave. Now, I'm allowing this X wave to occur as part of the B wave being unfinished. Let me grab this B wave over here. Now it's going to be much further in the future than I can actually place it. Oop, sorry. I'm just going to have to write it out because it's not doing it right. Okay. So the B wave would be way over here in the future, way beyond what's possible on this chart. But I just want you to realize that, you know, it would be way out here. But I'm allowing this X wave to retrace more than 61% because the only time you can allow an X wave to do that is when you have an expanding triangle. Expanding triangles are the one time that an X wave can retrace more than 61% of the previous pattern. If it was a flat, it needs to stop at 61% or less. Zigzag, the same thing. Or it needs to be, if it's a flat, it needs to be more than about 120 or 30%, but nowhere beyond 61 to 100. It shouldn't be anywhere in that range. But if you have an expanding triangle, the X wave can do this. So this is allowed behavior. And this violent action right here is a little suspicious because it's been moving pretty slowly and calmly up, and all of a sudden this really violent move. Typically, if a market moves and moves and moves at a very, you know, persistent pace and all of a sudden gets really volatile, it's going to be ending its trend. Just sort of like what you see here, and then we get this really quick spike down. It's inching its way down and get a really violent spike. That's typically, you know, how you end trends. So it's been inching its way up, and then we get this really nice spike up. There's a decent chance we're getting close to the peak of wave X. So I still think it's more likely that we're going to get another sell-off to finish the X wave after another ABC. But again, break above 1,000 and all the bearish scenarios are out, and the X wave is over, and we started a bull market. So that's the new outlook for Bitcoin. And I wanted to bring this up, of course, because it's a pretty significant change from what I've been saying. So I'd like to open it up now for some questions and answers, and we can discuss any, you know, ideas or concepts anyone has about what I've said or any concerns. So let me go ahead and if you can raise your hand, that would probably be the easier way to go. And Magellan, you could possibly try to manage this if you're still on the line. I do have some questions that have already come in. I don't want to unlock everyone's mic. I'll just unlock them individually. So let's see, I have a question here. I can't understand.
Glenn, I'm sorry. Why don't you do this? Why don't you try to see what's more relevant at this point, question-wise, and answer them?
Okay, well, I have three questions that are in the question and answer section. So everyone, if you can enter your question in the question and answer section first, then I can review them and answer the ones that I think are the most important. So let's see, the first question is a directional symmetrical or diametric pattern can wave I don't understand the question here. Doesn't even look like the question was finished. Let's see. Yeah, can wave I or wave G be the largest and most violent? I don't know if you can really spell that out. Reza, I'm going to unlock your mic real quick. So if you have a mic and you can unlock it on your end, we can discuss it real quick. Yeah, there you go. So in a diametric, I've noticed that wave G and wave A tend to be very similar to each other because you go through expansion and then contraction, or you go through contraction, then expansion. So the G wave and the A wave tend to be very similar to each other. It's not 100% reliable, but they do tend to be very similar to each other. But I can't say that applies to symmetricals. Symmetricals, you're just going to have 3 of the 4 advances being similar in price and 2 or 3 of the declines being similar in price, a total of 7. So 3 or 4, 2 or 3 or 4 of the up moves, 2 or 3 or 4 of the down moves, and you add them all together and you get 7. But we're not talking about the up moves and down moves being similar to each other, just the down moves similar to the down moves, the up moves similar to the up moves. Let's see, you also had recently announced that a new neo wave pattern might appear in the gold market. Yeah, I don't know enough about that right now. It's possible that we're witnessing a new phenomenon that doesn't obey any rules that I've ever seen. There's no time relationships, no price relationships, no Fibonacci, and no channeling that makes any sense. And I'm calling it for now a non-linear formation, but I can't prove it at this point that it's actually a real pattern. So I can't comment too much on that. The next question, I mean, we have to wait at this time to take a decision whether it is bullish or bearish, strong rejection. for Bitcoin, the only thing I can say with any certainty is that the dividing line is at $70,000. That a move above 70,000 is going to be bullish for probably the next year or two. As long as it stays below that, then the market, can remain in a bearish or sideways or down kind of trend. That's as good as I can get it right now based on the big picture, because it is possible based on monthly charts that this is the biggest, let me go back to this. This is the biggest, fastest drop since this low. So it is possible wave B is over, but it so far isn't going very far. So I can't be sure that wave B is over. So if it's over, we're going to be going sideways and down and speeding up and dropping further and further over time. If it's not finished, then we're in the next wave and we're going to get another big rally sometime in the near future. So it's just an unanswerable question right now. I think it's starting to look more and more bullish, specifically because of how violent this rally is. It's starting to suggest we might have a change from the market being in a downtrend to being an uptrend, but we have to exceed 70,000 to be sure. Okay, let's see. Is there any convergence of possible wave theory scenario within NRT? I do have my NRT charts open, so let me go over that really quick here. Let's see, pulling up Bitcoin here.
Glenn, you might want to explain what NRT is. Some people have never.
Oh, okay. NRT is Neely River theory, and it's something I've been developing and working on for the last 24 years. It's completely the opposite of wave theory. It doesn't focus on forecasting markets. It focuses on fundamentals such as volume flow, moving averages, technical stuff, and psychological stuff, and it merges them all together into a very elaborate non-forecasting approach to markets, where you're observing what the market's doing instead of trying to predict what it's going to do in the future. You just observe what the current conditions are and what that may mean for the future. So here's an example of that. Bitcoin doesn't have earnings, so I can't show that down here, but it's showing this is the structure of the river here. We have slow movement, which is the gray dots, starting to move quicker and getting out of the sort of the perimeter of the river, moving into the quicker part of the river, and then potentially up to the sphere. But in this case, Bitcoin is currently trending pretty nicely. It's indicating that it's moving about 127% faster than the average stock in the world. So it's moving, pretty quick, and that it's broken out and that it has demand. So this is like the perimeter. If you imagine this is the perimeter of the river and what's required for a trend to start, you need money to start pouring into a market to start creating an uptrend. And you can see that started over here. And then it finally had an impact where the market started to make new 52-week highs. And then it started to speed up after that. It started to move quicker. So it's moving closer and closer to the middle of its river. And then according to this chart is telling me to go to a weekly time frame. It actually gave a buy signal within the technical framework of an uptrend. It gave a buy signal just over the last 2 or 3 or 4 weeks. So what we're seeing here is demand going from a negative environment, which started when Bitcoin was, probably back in the year mid 2021, it looks like. And then it's sold off for a very long time. So money was coming out of the market, and then it started coming back into the market and it started moving back up, which you can see over here. And so we're starting to speed up, which makes it safer to look for buy signals on market reactions. So here's the technical sell-off, and then you can move to the psychological environment, which is showing here there's no safe buy at this point. It's indicating that this is the time frame you want to focus on. The other two are yellowed out because the market's moving too slow or too fast for these time frames. So we're focused on this time frame. And you can see psychologically all the traders are out of the market, which is why it's yellow. So we'd have to wait for a sell-off for a while, which fits right in with our weekly scenario. This one right here, that we're going to get another sell-off, and we're going to have a buy signal sometime in the, maybe the next 6 or 12 months at much lower levels over here, maybe around 50,000. and then we could resume the uptrend after that, and it may transition as it slows down to a monthly chart. We may get a buy signal over here for a really big rally, which would fit right in with our, monthly and weekly scenarios. So that's what NRT is currently saying, that Bitcoin is in an uptrend. It's currently correcting, give a buy signal, but it may be a while before it's safe to enter, trade-wise. So it's probably still an uptrend, but trading, precise trading entry has not been signaled yet. Okay, so that's what that indicates. Let me go back to the charts and the questions. Can the U.S. election impact the long-term? I don't think so. He's asking if Bitcoin can affect the election or if the election can affect Bitcoin. I doubt it. Bitcoin is, I think, eventually going to be the financial foundation of the world. So you should just think of it more along those lines, and that it's going to be probably the best thing that's ever happened to humanity, because for all of human history, there's been people manipulating currencies and, giving people pieces of paper for gold, and then they make more paper of their own and they can spend it like the US government does and all of the governments of the world, so they can spend money they don't have. If that is no longer possible, then the possibility of having wars and overtaxing and all the things start to disappear, because the public's going to have a lot greater say in what happens. So I don't think so. Is there a convergence of possible way? Okay, I've already answered that. Okay, why are you using 161% time of wave B of a running flat? Well, the time of wave B could be anywhere between about 100 to 200 or 300% of the time of wave A. I'm not projecting any specific amount of time. The structure just sort of implies that we're in a double zigzag on monthly charts. So if that's the case, sorry, that's on the weekly charts, I guess. Where is that? I'm sorry, I was on 6 monthly charts. So on the 6 monthly chart, just looks like a double zigzag. So, just the conclusion will probably be somewhere around here. Currently, it's 200% of wave A. It'll probably end up being like 250%, give or take, if this count is correct. So that's where that came from. It's not assuming a specific amount. We just want it to be at least 100% and no more than about 300%. Okay, for bullish scenario, it should move about 70,000. For bearish, yeah, it should not go any higher if we're in the bearish scenario for a while. And if it exceeds 70,000 sometime in the near future, then I think the bullish scenario is the only way to go. You've used the symmetric pattern from 15 to 30,000 as wave B starting. Just reading the question here. It's a long, long question. Let me go to the next one. As a general question, how to count complexity in a pattern? I'm still confused. Complexity is still, or is simply related to the number of monowaves. So here you have 3 monowaves, here you have 7. So this is simpler, this is more complicated. So the complexity level is 7 waves here and 3 waves there. That's all complexity has to do with, and it's as simple as that. How will the future price of Bitcoin affect the altcoin market? I'm not sure. I think most of the coins are just useless and they're not going to ever have any, real viability. But I assume there could be some top 5 or top 10. My Bitcoin expert still tells me he thinks Tron is going to be a potential big winner, because Bitcoin costs a lot of money to transact. It's somewhere in the $30 to $50 cost per transaction. So you're obviously not going to be buying a cup of coffee with Bitcoin. It would cost way more than the cup of coffee. But Tron, he tells me, is only like a few cents to do the same thing. So eventually your Bitcoin account could become your bank account and you would no longer need to have your money at a bank. But it would have to be in a crypto that's super cheap to transact. So I assume that over time, Bitcoin will be like the store of value for long-term savings and things like that, and people will move some of the money into shorter-term transactional things like Tron and Ethereum and things like that. In what scenario does the most bearish count come into play? Is there a price? Yeah, the price level is just as long as we stay below 70,000, because it's very likely we're going to meander below 70,000, no matter which count is correct. I can't tell you how low we have to go to prove the bearish count. Just as long as it stays below 70, that bearish count remains, and we'll have to see how it evolves. There's not enough information right now to be really confident about the bearish scenario, so we just need to be, you know, patient and just give it some time. Okay, first time our mentor is doing some. I don't understand that question. Let me move on to the next one. On the 6 monthly chart, is it possible we are seeing a running triangle since the high of November 2017? Running triangle 2007. I would have to make a new count here to do that. Hold on one second. So I assume you mean that something finished here. Let me see who asked that question. So Cameron, I'm going to go ahead and unlock your mic. Hopefully you can unlock your mic on your end and see what, make sure I understand your question. So Cameron, is your mic available? Let me see if you can unlock it on your end. It shows yep, I think yeah, there you go. Okay,
so where you've got wave
E here, you'd finish it here and started with that decline?
Yeah, so that would be from wave E, would then be wave A, and
Yeah,
then
okay,
B.
hold on, let me just go ahead and mark it off, so just make sure I mark it correctly. So you're putting wave A here?
Yeah, there.
Okay, and then I assume you have B wave over here?
Yeah.
Okay, a second. Okay, so let me get some channeling in here. Normally like to do triangles in orange, so I'm just going to change the color real quick. Okay, and then I assume you would have, you're talking about a contracting triangle?
Yes.
Okay.
And wave D would be maybe in.
Yeah. Okay, so the C wave would obviously be here. And the D wave would be getting close to finishing. Okay, now remember again that because of where we are, having so many scenarios is an indication we're in the middle of the middle of the middle of something, like we're in the middle of a lot of different patterns. So the middle of this pattern would be comfortably back in time, whereas the middle of my count is much closer, which makes it a better choice. You always want to have that middle dot as close to where you are as possible, or very close into the future, but if it's in the past, it's a little bit better than if it's in the future. So yours is a little further back in time, which makes it a little less likely. The A wave itself is actually, I think, smaller than the C wave, pretty sure. So that would mean there would not be a contracting triangle. It would actually have to be a neutral triangle. So, well, actually, the C wave and the A wave are almost identical. That makes it virtually impossible because you don't want to have wave A and wave C equal. And you can't make it a flat because the rally after wave C is going too slow. And the structure of wave A is very weird. Now, this is almost an unexplainable behavior right here, where we have directional action and then a 70–80% retracement and then directional. So it looks like a zigzag separated by an X wave, but the X wave retraced too much and wave A took an enormous amount of time. All these things are contrary to good triangular development. And wave C and wave A are almost the same. So there is no extended wave. So I would, unless the C wave terminated at a lower high and finished here instead, then it might be possible. But the behavior of wave A is very suspicious. And this count, of course, is not as close to the middle as this count is. So this is still the preferred scenario, even though your outlook would produce an almost similar outcome. We get, well, this outcome here. We would get a sell-off and then a big, it would not end up exactly like this, but we get a sell-off and a big rally. So yours would produce, a small sell-off after the D wave is over, and then the big rally would happen after that. It wouldn't be as big as this, but it would be, a nice size rally. But for all the reasons I just mentioned, I don't think this is possible. So that's it for that. Okay, let me go on to the next one. Could it be that the symmetric pattern starting at 15,000 hasn't ended yet and wave E concluded at 73? I'm assuming I'm going to have to go. Who asked that question? This is Ayun. See if I can find you in the list here. Okay, so I'm going to unlock your mic real quick. It is unlocked. So on this chart, your mic's unlocked, right? Your mic's unlocked, right? Hayun? I'm assuming I'm pronouncing your name correct.
Mine's correct.
Okay, so you're saying what if this is, now I'm hearing myself echo a lot. Is there any way you can turn down the volume when you're in so it doesn't echo?
Hold on, please.
Okay.
Can you hear me?
Yeah, I can hear. I just don't want to hear myself talking. Okay.
Yeah. If you
can turn down the
consider,
volume, then it won't reverberate. So,
okay, sorry.
You're assuming that maybe the D wave is over here and this is the E wave or something like that? Yeah, I can still hear myself talking.
Yeah.
Can you turn your volume down? Just turn it way down so I won't hear myself talking. So I assume that you're saying the E wave. I can still hear myself. Can you just put your mic on mute? So I assume that this is what you're presuming. And let's see. So this, I mean, maybe it's possible. It would take me a while to be sure of that. We would be ignoring the fact that the violent price action is normally with the trend. You see a really violent move, sort of slower, smaller, violent, slower, smaller, violent, slower, smaller, sort of violent. And then this drop is equal to these previous four, and then a violent move and slower. It's not maybe impossible, but that won't change the bigger picture that is now more likely to be bullish or not. And we can determine those details later on. It's not important to know right now exactly the precise count of everything. What's important to realize is that the preferred monthly scenario, let me move this down over here. Preferred six monthly scenario is that the middle of the structure is here, which means we're still in a B wave and that it's unfinished and that the C wave is not going to drop into the 5,000 range or less. That is probably only going to bottom around 25 to 50,000. So this is a much more bullish outlook than we've had for a long time. And it's all because wave A finished a little lower than I originally was presuming. And that lower conclusion finished with a sign of strength, allowing the B wave to go all the way back to the highs and make a slightly newer high. And it's taking a lot more time, a lot more complexity, which guarantees that this is counter trend, but it could keep rallying for a little longer to create this second zigzag and then get a sell-off after that. So most important thing to realize right now is that the odds are now favoring Bitcoin has not topped and that we will move higher before we get the bigger sell-off. That's the most important thing to understand right now. Is there a chance? Okay, so I just went over that. Is there a chance the long-term future of the U.S. stock market to be calculated? Yeah, well, maybe the Bitcoin will be the standard, the world standard eventually. I do think all fiat currencies are just going to fade away, and crypto and in particular Bitcoin will probably be the world standard. Okay, could it be? It's probably going to take a long time, by the way, and somehow or another the government's going to try to stop it, because I don't think a lot of people in the government are currently smart enough to realize the ramifications of Bitcoin, the fact that it's indestructible, unmanipulatable, unduplicatable, unprintable, potentially untrackable and untaxable. They don't understand the ramifications of that long term, and it's going to destroy government's ability to do things that people don't want them to do anymore. So it's going to be a very positive thing for humanity. And I think that's what's going to lay the foundation in the next few years for the biggest bull market of all time. And I've been saying this for decades. You know, most Orthodox Elliott people thought I was crazy. When the Dow was at 1900, I was laughed at for saying it's going to get to 100,000, but now we're at 40,000. You know, 100,000 isn't that far away. It just needs to double and a half, and we'll be there. And we have another 30 years to get there. So that's extremely possible now and very obviously possible. So I'm pretty sure that forecast will happen. And I think a big part of that boom will be because of Bitcoin. Of course, I had no idea 30 years ago what the reasons would be, but that's what wave theory told me would happen. So now it looks to me like the reasons for the massive economic boom, probably beginning around 2026, 27, or 28, is going to be transition toward Bitcoin and cryptocurrencies financially over a very long period of time, and massive improvements in medical technology, reducing the cost of healthcare and all that dramatically. And then as you into cryptocurrency as the foundation, financial foundation, the taxing and regulations and all the things will start to decline. It's just going to be a whole, you know, list of things that could happen, not to mention smart contracts and things like that that'll make business much more efficient. I can't confirm exactly what will confirm the bearish scenario. It's bearish as long as we stay below 70,000. Let me go back to the top of the list here. Okay, I already answered that. Okay. MicroStrategy and Coinbase rallied out of a triangle may be a hint that Bitcoin breaks out too. Yeah, I guess so. I don't really follow stocks with wave theory, so I can't comment on that. I can tell you from a river theory perspective that the MicroStrategy, it looks okay. I think what is there? I think that's their symbol. Yeah, it's just good volume flow, good breakout, relatively good, actually pretty fast acceleration. So it's moved from being underperforming the average stock in the world to moving faster and faster and faster. Now it's one of the top moving stocks in the world. It's moving 400% faster than the average stock in the world. So it's in the middle of its river. We recently had a buy signal, but it's starting to lose money. So I don't know if that's going to impact it or not. Any trading done would be on a daily time frame with stop around 1305. So that would, if I was going to do anything, I'd be long with a stop there. But right now, I can't confidently say what's going to happen. And I don't like to buy stocks that are losing money. So it's hard to say how that's going to pan out. Let me go back to the questions again. Okay. Okay, we went over the running triangle. Can we have lower degree X waves and a bigger degree? Yes, you definitely can have lower degree X waves and a bigger X wave. So on the weekly chart, we're looking at that possibility here, where we have this correction, which is an expanding triangle, followed by an X wave, followed by another ABC, which will finish a bigger X wave. And that bigger X wave will conclude around either here or here, and then we start another rally. So yes, you can have an X wave as a correction inside a bigger X wave. Okay, I've answered that one. If weekly chart assumes the time of wave A is more than wave B and wave C, is it okay? Okay, so let me go to that. Let me see who answered that question. So let me open up your mic again. Let's see. Yeah, okay, your mic's unlocked. So which A wave are you talking about?
Can you hear me?
You there?
Yes,
You there?
right there. Yes.
Okay, so which A wave, which time frame are you talking about? Weekly, monthly, daily?
The complex, the whole complex pattern, the first part in weekly chart.
Weekly chart? Okay, so you're
Yes,
asking
this symmetrical. Yes, this symmetrical.
here?
Yes.
Yeah, remember,
A-
symmetricals have no no concerns about time. Wave A can take more time. It doesn't matter. Time is an irrelevant concept for symmetricals. All you're worried about is price movement. So you want to make sure that you have price similarity of multiple advances and multiple declines. That's all you're looking for. So in this case, wave F, wave C, wave A are similar in price, not time. Wave B, D, F, and H are super similar in price, not time. This is a new discovery about symmetricals. The time is not a concern, and in diametrics, price is not a concern. Your focus is time. So you're focused only on how long each wave takes. And if you have 5 similar ones in symmetricals, you're only worried about how much price they consume and not worried about time.
Thank
Okay.
you. Thank you.
Okay. Okay, let's see if the bearish count where it went to almost 1,000 still. The bearish count is possible as long as we stay below 70,000. So let me go back to the more bearish long-term scenario. I think that actually is only on the 6 monthly. Yeah, so on the 6 monthly chart, the bearish count is possible if the V wave is finished, and I can't say if it finished here or here. If it is finished, then we could get a massive sell-off as the C wave increases the size of wave A, because this tiny correction, it's violent but tiny, suggests an expanding triangle. But normally in expanding triangles, the B wave wouldn't take this amount of time and this amount of complexity. So it's a little, it's hard to say. This is less likely in the middle of this structure is in the future, whereas the middle of this structure is slightly in the past, which makes it the better choice. So if you have the distance between the both of them about the same, this is about as far in the future as this other one is in the past, you want to pick the one in the past first, making this the better choice, and the long complicated B wave would not typically occur in an expanding triangle. It'd be a little bit shorter in time. So I slightly favor this more bullish outlook. And I think that fits the really long-term outlook for Bitcoin. If it were to become the international standard, is likely to move up quite a bit. Since there's only 21 million of them, it's going to have to be worth amounts of money per Bitcoin for it to, replace the entire world currency found, base. Okay, so let's move on to the next one. How can governments stop? I don't think governments will be able to stop Bitcoin. I think they're going to try. So it could easily be outlawed in any communist dictatorship country. That's, China will probably outlaw it. That'll be a big strike to it eventually. And any other country that's a complete dictatorship or a communist country could easily do it. Eventually, though, because you have to destroy the internet, which the world is just not going to tolerate that. You'd have to destroy the internet to destroy Bitcoin and cryptos. So I think eventually, even if some countries get rid of it, there'll be other countries that will say, well, we'll be the Bitcoin, center of the world, like maybe Switzerland or something. And there'll always be a country that will take that part, that role, and allow people, because of the internet, to do things over the internet that even if the governments don't allow it, will be able to happen. And so little by little, this is just going to wear away at the power of governments all around the world. And eventually they're just going to have to give up, and they won't have enough money to fight it anymore, probably. And after expanding, how much X wave going percentage? After an expanding triangle, an X wave can retrace about 70, 80, maybe even 90% of an expanding triangle. It's the only time an X wave could be around 100% of the previous pattern before you need to resume the downtrend. So it would depend, in my opinion, on the angle of the triangle. So if the triangle is drifting downward, then it's less likely to retrace, 100%. If it's perfectly horizontal, 100% would be possible. If it's drifting strongly downward, I think it should be at least 61%, but it may only be 70, 75. But this is, let's see, where is it right now? I think I did that on the daily chart. This is probably around 70, 75% right now. So this is about as much as it should go if it's an X wave and it's following an expanding triangle and the bigger X wave is not finished. Because remember, for this count, we would get another X wave down in the bottom right-hand corner of this chart. So we'd still be working on an X wave with this, the X wave within the X wave. So I think that answers that question. After expanding triangle, let's see. Is it possible the X wave that appears is much shorter? I don't understand the question. Altcoin chart can assist. Yeah, I mean, I don't follow anything but Bitcoin, so I don't know about any of the other coins. Tron does look a little more bullish than Bitcoin, but Tron's only like 12 or 13 cents. So if Tron became very popular, it could go up in the, you know, tens or hundreds or thousands, who knows? If it became a form of exchange for cheaper transactions, you know, just buying food and everyday items, I think Bitcoin will be more for larger transactions, real estate, things like that. Let's see, I don't want really long questions. So if you have a really long question you've asked, try to break it into smaller parts. Okay, the recording, this is a very good question. The recording will be automatically sent to you by GoToWebinar. It probably will arrive within 12 hours or less, but we can't guarantee exactly when you're going to get it. So I would give it 24 hours, and if you haven't gotten it by then write to Magellan and ask him to send you a copy. But otherwise, it should be probably within 12 hours or less. If we consider 16,000 to 30,000 as wave A, around 25 to 48 is wave C, and 3 to wave E, the price of each wave appears to be very high. So let's see. Hayun, I'm going to have to ask you, hopefully your mic won't create a lot of reverb again. Let me go and unlock it and see. Okay, so your mic's unlocked again. So if you can explain to me which time frame you're talking about first.
Weekly chart.
Which one?
Weekly.
Weekly. Okay, so on the weekly chart, this chart or one of the smaller charts?
That's okay. Okay, this chart.
Okay, so what is your question?
If you consider 16,000, 30,000 as wave A, and
So you're talking
around
about
25.
this whole thing, you're talking about this whole rally being wave A?
Yeah,
Okay.
and if sorry,
Okay, well,
and
what I
around
can tell you
25.
right off the bat, there's no way that's going to be possible. What most people don't understand is behavior of waves is super important in understanding where patterns start and stop. This kind of behavior right here is the indication of something new. This kind of behavior is the indication of something new. You don't want to have violent price action in the middle of a correction. So you can't have this as an ABC because wave B takes too little time and it's too violent in relation to the other waves. So there's no way this is an ABC. So that wipes that out. In this particular case, if this were the B wave of an ABC making up wave A, the B wave takes too little time, so it can't be an ABC zigzag because the B wave in a zigzag can't take less time than wave A. So you have to pay very close attention to violent price action and time consumption to know what is and is not possible. So any idea that this could be an ABC up to here is not possible. Okay? Not saying ABC,
Okay,
I
thank
mean
you.
finishing something bigger. It's an ABC, but it has to continue because the B wave taking less time than wave A immediately tells you you have to be in a triangle, a diametric, or symmetrical. And then if you're in any one of those, you're going to have certain rules like wave C can't be slightly shorter than wave A, which it is. So that's impossible for it to be a triangle. Can't be a diametric because we don't have enough time similarities occurring between A, B, C, and D. So symmetrical becomes the only choice because we have wave A, wave C, and this thing keeps disappearing over here. Wave G, similar in price on the upside, and then wave B, D, F, and H, virtually identical in price. That's behavior you should never see in a pattern except for in a symmetrical. 4 waves in a row, all exactly the same in price but different in time. The only pattern that allows that is a symmetrical. So you have to be very careful about where you place labels. You can't just say, oh, I'll just place it here and place it there. And that's people who want counts to fit their emotions, not fitting a set of rules. You have to follow rules very rigidly to make sure you don't get distracted with all kinds of nonsense. And you also have to make sure you begin from the largest time frame and work your way down little by little, making sure every count you're dealing with follows all the necessary rules for that time frame before you go to the next lower time frame. Otherwise, it's just an endless, confusing mess to try to do wave analysis. And most people don't understand how rigid these rules are, how rigid time rules are, how important velocity of movement is in deciding what the direction of the trend is. Like I can look at this chart immediately, and even if I didn't see any of this, I would immediately know the trend is up and that this can't be the end of it. The trend is up, this can't be the end of it, because these are counter trend moves moving slower than the violent movement and smaller. So we know the trend is up the entire time all of this is happening. This you may not have known here. This is a little iffy, but then we get another violent move, and now we're moving very slowly downward, suggesting that this is counter trend behavior and all of this is the uptrend. So it's favoring that we are going to make more new highs, even if we keep meandering down for a while in this X wave. Let me see if some more questions came in. Is it possible this current correction is a diametric? We're in wave F. Again, I've explained that to you. We would have to restructure things in a way that doesn't make sense. We would have to ignore violent price action, to make this wave F and this wave G. We would have to ignore all kinds of behavior in here that would not make sense. So I would say, no, that's not possible. Okay, diametric. Could it be that the symmetric pattern starting at 15,000 had yet? Okay, we've already talked about that. I've covered most of these. If I haven't answered your question, maybe because it was too long, resend it, but make it simpler and shorter. By the way, I meant for this current X wave. Okay, so for the current X wave, you're talking about a weekly chart. This is Julian. I'm going to go ahead and unlock your mic, Julian, so I can make sure that I can understand your question. Okay, so your mic's unlocked. Hopefully you can unlock it on your end. There you go. Okay, so which you're talking about, the weekly chart?
I guess it would be a daily chart.
Okay, so what's your question here?
So you're currently potentially in an X wave,
Right.
from like you have you stop at I wave of the symmetrical and potentially in an X wave. My question was going to be, is it possible that it's a diametric and we're in wave F? But I realized that you were specific about diametrics is nothing about price and it's all about time, and that doesn't
Exactly.
look like. Yeah.
Right.
Okay.
So if I made a copy of this chart, this is a perfect example of how you can determine what's going on in real time as things unfold. So you look at this chart, and if this is all you saw, then you would immediately assume, because 80% of the time the B wave is going to take more time than wave A. So you copy this, and you would say it's going to at least take that amount of time. And you can double or triple it, and it would probably not take more than that amount of time. So we have evidence here that the B wave, the B wave took about 3 times the time of wave A, right? And it retraced more than 61%. So immediately you wipe out any zigzag potential, which means wave A is corrective. So we would put colon 3 here. Obviously, we know the B wave is corrective because they're always corrective, but we could still technically be in a flat, right? In a flat, the C wave would be impulsive. This structure, I mean, you'd be a little hard pressed to make that a 5-wave move. But if you did, then you immediately know that the retracement of this has to be faster than the C wave if this is the end of a flat and the end of the X wave. So if the X wave were over here and it was the end of a flat, you would have to retrace that C wave in the same time or less as wave C took to form. It doesn't look impulsive to me. But if it were, we would have to retrace it in this amount of time or less. And as you can see, it never did that. So you immediately know in this time frame that the C wave must be corrective. And it looks corrective, and behavior is that it is corrective. Then you start involving time. Once you have at least 3 waves in a pattern, you can start involving time calculations. And you can see here for sure, wave A is very different in time than wave B. Wave B is, let's just remeasure the B wave, hold on. So the B wave and the C wave are sort of close. It's close enough, maybe we're in a diametric, but then you get this D wave. And all of a sudden you've taken, way more time.
Mm-hmm.
So immediately the diametric is now out, right?
Thank you. And I was going to ask you actually, what is your, how do you say, like leeway when it comes, because you mentioned the rules are quite rigid.
Yes.
and I know you've mentioned in the book that there's a bit of grace, but like, let's say it's 3 times as much time, but it just a little more than 3 times. Is it more like, okay, now I'm going on a feeling, or is it like, no, it absolutely can't be because it is mathematically longer?
You're talking about a B wave compared to an A wave?
Really any wave in these like corrective patterns where you're like measuring time against time,
Okay,
and you're
well-
like, well, this is, or you've mentioned, let's
Let me just
say,
explain to you. In a flat is the only time a B wave can take an enormous amount of time. So it could be 5 times bigger than wave A. If you're using very complicated charts, remember, high complexity always destroys reliability. So this chart is too visually complicated, too many monowaves, way more than 55. I don't know how many, but I can just tell you there's more than 55 just by looking at it. That means it's moving beyond the realm of reliable analysis. So you would have to move to a weekly chart to get a good feel for how complicated it actually is, and then make some. So this is in the realm of more than 13, less than 55, and this is where good wave analysis becomes possible. So on the daily chart, you can measure the time, but you can't really do good wave analysis on here. But right off, the time is going to tell you initially that you're not in a, well, the price retracement of wave A tells you you're not in a zigzag, and the structure of wave A tells you you're not in a zigzag. Then the time situation for wave D tells you you're not in a diametric. You know you're not in a flat anymore because of the C wave wasn't violently retraced, so the flat's out once you start seeing the recovery. So you've gone from initially assuming you were in a zigzag, that got wiped out here. Assuming you're in a flat, that got wiped out mostly because it doesn't look like a 5-wave move. I don't think there's even an extended wave. I think this drop and this drop are about the same. So you probably would have known before you saw the rally, but the rally would reinforce it. So then you would wipe out the flat idea. So then you move on to a triangle. And in a triangle, you typically have, in expanding especially, you have continuously expanding time periods. So B is bigger than A, C is bigger than B, D is bigger than C. And you definitely have that here. And you have constant bigger and bigger drops, right? So in the direction of the trend, you can see the E wave is the biggest, C wave is next, and the A wave is the smallest. So it's perfectly consistent with an expanding triangle. It channels like an expanding triangle. Wave A is about 61% of wave E, and you only have 4 touch points, 1, 2, 3, 4. One misses on the top, one misses on the bottom. It's perfectly designed expanding triangle. So I have zero doubt that this is an expanding triangle. But the analysis is better done on a weekly chart because the complexity is manageable, and you can see it really nicely. Wave A is violent, B is slower, C is trendy, but more time consuming, 2 zigzags instead of 1. D takes even more time, overlaps the B wave, the E wave is the longest, and you have the violent spike, which is typical at the end of an E wave. You have the spike for the C wave. You have sort of a spike for the A wave and the B wave. These are all typical behaviors of an expanding triangle. And then in an expanding triangle, the X wave is the only time it's allowed to retrace more than 61%. So all this fits into the idea that probably we're in an X wave and it's probably not finished, but that is part of a bigger advance according to the half-yearly charts that's going to keep pushing up. So I'm fairly confident that we are in an X wave. We're going to go eventually higher, but we're going to go sideways and down while we finish this X wave. That's the most likely based on all the evidence, which is pretty structurally sound. And this violent movement up, as long as it dies off, would be a signal we started a new correction for the X wave. But if it doesn't exceed this in the time that this took to form or less, then this is definitely a counter trend move, and we're going to head lower again. So all you need to do is measure this drop here. And you just copy it and move it over. And if we haven't exceeded 70,000 by this time, then this is counter trend and we're going to go lower again. And any retracement of this by 61% or more would virtually guarantee this is counter trend. So that's what I'm waiting for, but any move above 70, and that's it. The X wave is probably over and we're going a lot higher. I don't think it's going to happen, but that's what it would imply. And the only reason to worry about it is because this is so violent. See how much more violent it is than this and all this behavior. This is all very choppy, weird looking structure. And if this is an expanding triangle, started here and into there. So it could be the end of wave X and we started a new trend. But the minute we see any hesitation, especially a drop back down to this low, then I think that's it. We're going to go into a more elaborate correction and eventually head lower. Okay, let me go back to the questions again.
Could I just clarify? Thank you. See the two boxes you have there? That was kind of my time question, is like, how much leeway do you give if it goes a little bit beyond the box, but
Oh,
then
no, that's a pretty hard, fast rule. There's no exceptions to that.
okay, great. That's what I was wondering.
Yeah.
Thank you so much.
The only thing you might be able to do is using the rule of neutrality. You could say, well, the pattern really didn't finish here. It finished there because this is sort of slightly upward and you could use the rule of neutrality. So you might be able to push it one data point further, but it's a pretty hard and fast rule.
Thank you.
Okay. Okay. There's a lot of 40 years of hard work. Oh, somebody's just thanking me for my 40 years of hard work. Okay, I appreciate the good comments. Maybe X wave has completed in a weekly time frame and new wave. It's possible the X wave is over. I just can't prove it yet. And I think that one is a little too complicated. Okay, well, I think that pretty much covers it. We've gone past our regular time by quite a bit. So why don't we call it a day? I appreciate everyone attending. Hopefully this opens your eyes to the new emerging reality for Bitcoin. And if you don't have my Bitcoin service, you might want to sign up and get that, because I'll, of course, be following this very closely. This is a dramatic shift. It's not dramatic from the 6 monthly charts or half yearly charts, because it's just a little tiny adjustment but from a day-to-day, week-to-week kind of trading, going from 70 to 130 or 160 is a big move. So it's dramatic on short-term charts, which is why I wanted to do the webinar. But it's not going to change our long-term stuff that much for a while. Okay, well, thanks everybody, and I will hope to hear from y'all in the future. Let me know what you thought about the webinar, and have a good weekend.
And I'm glad